Hi, my name is Ray Fuentes. I'm the Red Shoe Broker and host of the Rockstar Connect free networking event in Roseville. Today, I'm here with Benita Tadena from Movement Mortgage. Hi, Benita.
Hi, Ray. How are you doing?
Doing great, thank you. I'm like most other people, I'm sitting around the house trying to stay away from other people.
Yeah, our new acronym, SIP, Shelter in Place.
Oh, yeah.
Didn't see this one coming.
No, right? Yeah, I got a funny story about that. Last year, I met a gentleman and we were at a Rivercats baseball game, and he's not in real estate, and he said home values are going to go down 50% by next year. I said that's not even possible, and then boom, I'm like, wait, hold on a second now. How did he know? But
I don't know. The experts are saying possibly not by 50% because I did get some statistics from Barry Habib on home ownership in America. So basically, he told us that 40% of homeowners in the United States actually own their homes free and clear.
oh, that's great. That's good news. I didn't know that.
Yes, and then 50% actually owe less than what their current value is.
Also good to know.
Yes.
So I actually have a client who lost their job because of the COVID-19 situation, and I know other people that have reduced hours. So of course that's an impact on their income, and they were asking about doing this mortgage forbearance thing, and I said, well, hold on, what's that mean? So that's what started this whole conversation. What exactly is mortgage forbearance, and how does the CARES Act, what does it say about mortgage forbearance?
Okay, so we want to actually get the right information out there because mortgage forbearance means that they're going to let you forbear on the loan, but that doesn't mean forgiveness. Okay, you're not going to be forgiven of the payments. It could be up to 6 months where you can forbear your payment, your monthly mortgage payment.
We're not talking about forbears, right?
Yeah, no, not forbears, just a forbearance, okay? Which is much different than a deferral, okay, on a loan. They're going to have to agree to the terms of their servicing lender on the forbearance.
Okay.
Which means the terms could be, okay, we'll let you forbear on the loan, but at the end of the 6 months, you'll have to make a balloon payment of all 6 payments.
That's kind of what happened with my friend. She called in. She asked about forbearance, and they said, well, we can do this for 3 months where you don't have to make a payment, but all 3 months of mortgage payments are going to be due at the end of the 3 months, which to me doesn't make sense, because if the reason people are doing it is because of job loss, the lack of income. So why, for lack of a better term, postpone the payment if they have no additional income coming in to begin with? So that just doesn't make sense.
Well, some of the per se workarounds that they're going to be coming up with is, once again, modifications. You're going to have to go and try to modify your loan. You haven't made the payment for 3 to 6 months, and you don't have that type of cash coming out of your pocket, and possibly just now getting back to work. They're going to look at modifying the loan. So we all went through the loan modifications in 2008, and then you're going to have to qualify, and for the modification, it's from the Facebook Live that I watched this morning with Barry Habib and the experts. They talked about how this can greatly impact the real estate industry and the mortgage industry. And I don't know if you know how it works, but we all work off of warehouse lines. So we fund the loan, and then we package the loans up, and we sell them to the investor, and then we replenish our warehouse lines, our equity lines, so that we can go out and fund more loans. When you're a servicing lender, you are basically paying the investor, okay, for those payments on those loans, and then you wait to get the payment back from the borrower. Okay,
well, from the homeowner.
From the homeowner, correct, from the consumer. So when they pay it, then they're replenishing your warehouse line, your equity line, so that you can go ahead and either fund more loans or pay next month to the investor. They're basically, when you're making your payment, you're always 30 days behind in your interest, because if you pay it April 1st, you're paying for the interest that you accrued in March. The servicing lender is actually paying the April 1st payment to the investor March 1st.
Oh, so it's not that the mortgage isn't paid on March 1st. It's paid on March 1st by the investor, and we're basically reimbursing
by the servicing lender.
By the servicing lender.
To the investor, yes.
Right, by the servicing lender to the investor, and we're basically just reimbursing them, the servicing lender.
Correct.
Interesting. Okay.
And replenishing their warehouse lines so they can go out and either, pay in advance on some more servicing or go out and fund more loans.
Got it.
That's
okay.
how the warehouse lines work.
All right. So we talked about the possibility of a balloon payment. Have you heard of anybody just tacking on the 3 extra months of mortgage payments?
Well, I just shot out a video yesterday, and that is part of the script that I did do, that there may be some lenders that will say, okay, we'll just tack that on. That's more of like a deferment. We'll tack it on to the end of the loan, but that's also like a modification.
Yeah, so let's talk about loan modifications for a minute. So we went through, as you mentioned, in 2008, we had a lot of people doing loan modifications. And one way to get the loan modification approved was people were basically just not making their mortgage payment. They had to somehow demonstrate that they weren't able to. Well, I know how it affected the credit in the past. Is doing a loan modification or this mortgage forbearance, is that going to have an effect on people's credit scores?
With the CARES Act, they're saying that it can't impact their credit. What we don't know is when that consumer, goes to do another loan, somehow they're going to be able to see that there was payments missed on that. We're not quite sure how that works. Once again, the government has said this is what we want to be done, but for lenders to turn around and implement that's kind of a different story. We have to figure out how to implement that. And I do know from the modifications that did have an impact on certain loans.
Yeah.
If they did modification where the second mortgage was forgiven, they looked at that as a negative impact on credit. So I'm not sure. We're in new waters, and a lot is yet to be explained.
Interesting. So this CARES Act and not the mortgage forbearance, well, even the mortgage forbearance part, my understanding, even has an effect on folks that are in the process of purchasing a home now.
Yes.
And how does that happen? How does that work? What's happening to them?
Well, the guidelines have kind of changed, and that's from lender to lender.
Okay.
So we're doing a verification of employment 5 days prior to the close of escrow, and then we're also doing a 48-hour certification from the borrower that they are still employed or their self-employment business is stable. So it's going to be different from lender to lender. You're going to have some lenders that are still doing down payment assistance. You're going to have some lenders that are not. It's more volatile right now than I've ever seen it in the industry. And I went through that. I started in 2000 and here we're in 2020 and it's all new. It's just all new. It's a whole new ball game. I actually encourage everybody, if you have the money, make your payment. Nothing is for free. And I can't say now before it happens how this is going to adversely affect you.
Right. So that's actually basically the same advice that I gave to my friend. I said, if you can afford it, if you can make the payment, make the payment. Otherwise, because you don't know what's going to happen. In terms of people purchasing a home now, in the process of purchasing a home, do you see any concerns from the service providers that as soon as the loan is, the escrow is closed and that the borrower is going to implement their mortgage forbearance opportunity or try to do
It's already happening.
Oh my gosh. So what's happening there?
And this is just from what we've been told, that you know, the loan closes and immediately the borrower is implementing the forbearance. The best thing that we can do in the industry is get out there and educate people that the forbearance is not a forgiveness. There will be some type of an impact. There'll be an impact on our economy, and there will probably be an impact on you know, future credit that consumer might be able to get. Whether it's on that home or not on that home, I just don't know. Then nobody can really explain how that's going to impact in the future.
Right. So Benita, I'm a realtor, and while I have some general information to help folks with, I'd really think they'd probably benefit from speaking to you. What's your phone number?
They can reach me at 916-549-8521.
And it's probably better if they contact you by email, right? So what is the best email for you?
The email would be benita.tadena@movement.com. So that's BENITA.TADENA@movement.com.
Thank you. And I'll go ahead and put that information in the comment section so that when others get an opportunity to watch this, they have a point of contact for you. Thank you very much. You have anything else that you'd like to share?
Nope, I think that would be it. Just to let them know that, you know, like I said, it's all new territory. There's lots of questions. If I don't have the answer, I'm going to try to go get the answer for you. And there's information coming out daily regarding forbearance in the CARES Act.
Okay. So thanks again, Benita, and thank you for watching. My name's Ray Fuentes. I'm the Red Shoe Broker. Broker Ray out.
Thank you, Ray. Thank you for having me. Bye-bye.